Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba. Thanks for joining me. Tonight I'm joined by Maurice Madiba, Founding Director at Cloud Atlas Investing. Maurice, thank you for joining us.
Thanks for having me.
Let's talk some of your indices. I know, go back a little bit, 2014, 2015, a little bit of 2016, difficult trading environment in terms of returns. How are we looking over the last year? How have we started the year out for some of your indices, your African indices?
So I'll predominantly focus on our Big 50 index.
Sure.
Looking at last year, I think the world was sort of recovering in terms of African markets from global uncertainty and the turmoil that was happening.
Right.
You had the Brexit that came out, which sort of kept the index quite stagnant. But the two major moves of the index last year was the devaluation of currencies.
Right.
So last year, 2016, was really driven by currency devaluations in Nigeria and Egypt.
Yep.
And then coming into this year, there's a little bit more global certainty in terms of politics in the US, politics in the EU, with Brexit particularly, and then looking at now election season in Africa. So we've sort of started with a slightly negative sentiment in African markets, index being down about 10 to 15%.
Let's talk about the index on its own. Top 50 buy, market cap?
Yeah, it's more an enhanced index,
Right.
so it's your big 50 stocks across the continent. So what we have of our suite of indices, this one we've looked at, and we've literally taken the stocks that most represent country and sector.
Right.
So as opposed to taking a top 50 index where then it becomes crowded with one industry or one country, say for example Nigerian banks,
Right.
we have quite broad representation of banks from across the continent, food and beverage companies from across the continent and the like.
Okay.
Yeah.
How do you force that diversification? Should we anticipate that there'll be stocks coming in and out?
Not too much movement. We're trying to avoid that because what we're looking to really build is Africa's Fortune 50.
Right.
So it gives you the exposure to the blue chips on the continent and also a few opportunity stocks. So really playing in the large cap space and a few mid cap companies that are there as well. So the process of including stocks actually involves us going through an iteration process, if I can call it that, looking at each sector, looking at each country, and then including the stocks based on that qualifying criteria.
And to be clear, it's the top 50 ex-Africa.
Ex-SA, yeah.
Okay. Now, if you're looking at, I guess, the construction of it, what are we looking like from a country selection perspective? How heavy is Nigeria, as an example?
Yeah. So you've got 15 different markets in there,
Right.
a lot of sub-Saharan Africa, all of the markets there. Africa has about 26 stock exchanges,
Yep.
so we're looking at 15. We've got certain qualifying criteria for that. And then you've got Morocco, Kenya, Nigeria being in there, a big worry for everyone.
Yeah.
Has actually down-weighted quite a bit over the past 2 years. It used to be about 20%, now it's down at 15.
And that's just a function of the performance of the market?
Yeah.
Okay. In terms of sectors, what's the split like? I'm assuming quite a bit of financial services and banks in there?
Yeah. A lot of banks. Banks makes up about 40%
Right.
of the exposure. You've got food and beverage coming in at about 28%. And then you're looking at other sectors which are in there, healthcare, infrastructure, industrials. Mining, surprisingly, is less than 1.5% within the index. But you still have, telecos in there sitting at about 18%. So it's quite a nice mix, but it's also giving you what's happening on the rest of the continent. So it's not us overweighting a sector like retail, which you can't really trade, but it's more a function of us giving you sectors that you can trade.
Right.
Yeah.
So what overall theme then are investors exposed to when you're looking at this index? Is there a particular outlook that's going to drive overall performance?
Yeah, I think it's more a function of looking at buying African, gaining African exposure.
Right.
On some of our roadshows, we've met a manager who said he would rather buy Apple over Africa any day of the week. So, the one thing about that type of statement is that there is no products to trade all of Africa in one go.
Right.
So we're really looking to give people that exposure to African markets, but at the same time show and highlight some of the performance of the companies. So as at end of January this year, on a year-to-year basis, Apple's done about 24%. So if I was to slot that into where the big 50 is, it's sitting at, on US dollar terms, it's sitting at number 11.
Okay.
So there are some companies that are doing pretty well in terms of performance on the continent. And, you know, it's a case of this index giving you that exposure to that.
Sure. Yeah. Okay, let's talk one or two ideas within the index. Anything that's particularly interesting?
Yeah, so one of the things is there's Seplat in Nigeria,
right,
which is an upstream oil company.
Which would have been a swear word at the beginning of last year.
Yeah,
okay.
Exactly. But now as you look at the price recovering, their production numbers are slightly down, but I think it's one of the listed indigenous companies that actually does drilling, does production of oil and gas, and then has a lot of distribution into the Nigerian indigenous market.
Right.
So if you look at Africa's growth trajectory, it's not really going to come from extractive processes, but it's going to come from, you know, refining and the likes. So we do need indigenous players that then contribute, employ a lot of people, but you need your upstream and your downstream sort of services across the continent.
Right.
So where you have a local indigenous player in Nigeria, in the likes of Kenya, you have a local distribution market by the likes of Ken or Kobo.
Right.
So just to give you a comparison of their year performance relative to Apple. So Seplat has done 26%, which is about a 2% better than Apple.
In dollars? In
US dollar terms.
Okay.
And then you've got Ken or Kobo, which has done 32%. So it's about, you know, 9% higher than what Apple has done.
Right.
So if you look at that, you look at Ken or Kobo, why are these companies doing so well? I mean, Ken or Kobo is a retail marketing, is an oil and gas marketing company. So what they do is they distribute a lot of oil products and petroleum in Kenya, in Uganda, in Burundi, in a lot of East African countries.
Right.
And they're really doing exceptionally well in terms of managing their costs and making sure that the distribution is on point.
Right. So I guess in terms of prospects for growth and improvement in profitability, does that remain? I know the region, specifically East Africa, is doing quite well, so I'm assuming the company should be able to tap into that.
Yeah. I think if you look at some of these companies, I'll give you one more example, which is companies coming more to the listed fore and using that to raise a lot of capital to go and expand,
right.
You know, and improve their prospects, lower some of their costs, improve accountability and governance. As an example, in Zimbabwe, there's Nico's Diamond Holdings, which is one of the first short-term insurers listed
right.
In that market. But it really is an example of what should be happening across some of these stock exchanges in terms of new listings coming to the fore, raising capital and expanding business operations.
Right.
So I think what we will see in the African markets over the next couple of years is more participation by your retirement funds in the listed equity space, therefore driving up liquidity, therefore driving up more listings. And then those businesses that are currently not listed, looking to get listed, and the ones that are listed, having improved liquidity, having a stronger capital base, and then being able to deploy that for expansion plans, whether in that domestic market or maybe regionally or even international markets.
Let's talk a little bit on the short-term insurance sector. Is that across the board? Are you looking at vehicle insurance, household insurance? How far along the suite do they play? Yeah,
so all the way. There's also cargo insurance. An interesting one they have is golf insurance.
Okay, what does that mean?
So if your golf equipment gets stolen or what have you, they cover you.
Nice one.
So they can't unfortunately help with your handicap, but it's one of those interesting products that they have in the market. So we're really looking at saying, okay, if you've got that type of coverage, you know, it's a great business opportunity. Thinking of some of the roads in Zimbabwe, they're really in a bad state at the moment. So motor insurance would be naturally doing very well,
right.
You know, and you've got household insurance and the like. Although the crime levels are fairly low, it is insurance that people are starting to look at to say, look, if I've got some disposable income, I'd rather have protection than not.
Yeah.
Yeah.
In terms of insurance penetration in the market, is that something where there's scope to grow?
Yeah, there's a lot of growth. I mean, looking at Africa's markets, it's not as sophisticated as, you know, developed markets, and so we know this is the last frontier. You've got, from a banking perspective, close to outside of South Africa in some of the other major markets, about 10% of the population banked, or 20% of the population banked, 10% investing in pension funds. Then how much more is going towards insurance? I mean, the numbers are fairly low at this particular stage, which is all the more reason why these economies can start growing, why there's quite a huge potential for them to get better distribution, better people taking up this insurance and the like.
Right. Okay, so the index overall, would you say it's playing in what, the mid-cap space, large cap? Where does this exposure get you? How does this promote liquidity, as an example?
So it really plays in your in some of your large cap stocks and your mid cap. So, you know, as I mentioned, Africa's blue chips, you've got the likes of Safaricom and their Atijariwafa Bank, Guarantee, your Nigerian breweries and the like.
So lovely breadth, eh?
Yeah. But what it does is we have a quarterly rebalance. So for your investor that's looking at the more developmental aspect of this, saying, I really want to see African markets develop, you know, there's a quarterly rebalance, which then provides a sticky source of capital to some of these stock exchanges, drives up liquidity numbers. And as those liquidity numbers start to increase, you know, you'll start to see that these exchanges would hit the monitor of international investors and hopefully also local investors. You know, for me, looking at Africa in the next 10, 15 years, you want a case whereby people are saying, I've made a lot of my money from trading stocks in Africa. Rather than saying, you know, I started a chicken business and, you know, that's how I made it.
Finally, I guess, how does this then play into the active versus passive discussion, right? A lot of investors would come out and say, I know these markets really well, I'd rather be active in them. What's the counter to that?
Yeah. I mean, I was reading Warren Buffett's letter to these investors. I don't know if you saw it. Really talking about fees and costs and the bet that he's done about, you know, passive product versus the active product that he's so far leading. But one nice quote I saw there is that when somebody with, you know, a lot of experience in these markets meets up with somebody with money, the person with money ends up leaving with the experience. The person with the experience leaves with the money. You know, so. Typically what happens is a lot of guys have gone into Africa in the active space. It hasn't been a good performance for them for the past 2 years, literally driven by the market dynamics that have taken place. So you've seen a lot of guys lose their shirt when they're trading African markets, and there's a number of reasons for that. But I still think the markets aren't yet ripe for very credible and very well performing, consistently performing active asset managers at the moment. I think there still has to be a lot of development that takes place for them then to move into where products become available, like futures products, derivative products, short selling and the like. So there needs to be, if we build this market up from bottom up, and this is what this product does, then it sort of helps in future for these products to come on board and do really well.
Perfect. Let's leave it there. Thanks to my guest, Maurice Madiba, Founding Director at Cloud Atlas Investing. That's all from Buy Africa this week. Remember to follow me on Twitter, that's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.